Hi everyone, and welcome to this presentation. I'm looking forward to talk to you guys today. My name is Silvia Bellrock, and today's webinar topic is going to be how to generate side income with ETFs, part-time trading as a side hustle. So I'm definitely very excited to talk about that with you guys. I'm going to share my story, what I went through, how I get there, how I got where I am currently as a full-time trader, and yeah, what it takes to be a trader and what it takes, of course, to get there before you can generate some decent income. So my name is Silvia Bellrock. I started trading in 2013, and back there as I started, I had almost no money in my account. I went from so to say zero to a pro trader in a couple of years. So this is definitely, you know, nothing to brag or something like that. It's been a lot of struggle, and I would like, of course, to share a little bit my story before we go into the details of the strategy which I'm using and which I would like to share with you. So I was actually back there in Bulgaria, and like I had back there little to no money, no previous financial experience. So basically I started from zero, from scratch. But what I did have back there, it was the desire to get out of the unfulfilling grind, the desire to succeed. And I had as well an open mindset. And I think having an open mindset is very, very important when it comes to trading or in general, in any aspect of life, you know, trying to accomplish something new skill, whatever you're doing, you definitely need an open mindset and the willingness to succeed. So a little bit of background about my story. I immigrated alone from Bulgaria to Germany. That was back as I was 18 years old. I wanted to get out of the country. Bulgaria is one of the poorest countries in the European Union. So I just was looking for something else, for a better life, to succeed a little bit more. Went to Germany. Actually, I was doing pretty well back then, even though I started from scratch. I managed to study computer science, worked in one of the top companies in Germany. But at some point, I'm sure you guys have been through that as well, where you ask yourself, is that all? Is that why I studied so hard to, you know, be an employed person and just go day by day, and you see that you just don't have a lot of potential to the upside. And at some point you start asking yourself those questions. And that was the point for me where I wanted to get involved into something new, and I wanted to start trading to get out of, you know, this whole situation of being employed, not being able to do whatever I wanted to do. So I was struggling because I was trading as I was working at the same time, and that was, you know, not easy. I'm sure a lot of you guys are doing that as well, part-time on the side. And for some reason, everything what I did never kind of worked consistently. I always had periods of time it worked decent, and then all of a sudden stopped working. And then you feel like you're starting from scratch. Something is happening. The strategy is not working, whatever. So we're going to discuss those points in a few minutes, because this is one of the main reasons, in my opinion, a lot of beginner traders and also advanced traders fail to continue pushing and fail to succeed in trading. But eventually, I grew up my account to 500,000, and that was the point where I decided to quit the job, to move on and go full-time with trading. And then, of course, after that, I got a couple of other, you know, people who I know, friends, to manage money and so forth. So it started to become even more lucrative. But up until then, it was definitely a huge struggle. I went through an emotional roller coaster. And, you know, when you're trying to build a trading business and working, you're burnt out at some point. You can't keep up with the whole work, trying to follow up charts, having meetings, having to deal with stress at the work and, you know, everything what you're going through. So basically, I was also trying to find the holy grail, which I'm sure a lot of you guys already know it does not exist. No one knows where the market is going to go. No one knows what's going to happen next. It's all about being in the right market cycle with the right risk management. And it's all about math, in my opinion. So I was struggling to accept the fact back then And at some point, you just become exhausted, and I knew something had to change. So I wanted more free time for myself. I didn't want to work and keep trading and struggling like that, because I was not succeeding, even though I put so much hours and so much hard work. For some reason, I did not get rewarded. And that was the point where I decided, I can't go with those big, huge P&Ls anymore, swings in the P&Ls. You have huge days and then a lot of down days, and you just feel like you're not getting out of this loop of up and down, up and down. And I decided, okay, I need to throw everything what I know and start from scratch, start to see what works for me, try to focus on myself, try to find what kind of trader I am, what kind of personality do I have, and apply my personal strengths to a strategy, which I can use also in the future. So I knew what held me back was definitely myself, and nowadays you have so much information going on, which can be great. Don't get me wrong. I think information nowadays is good, especially, if you're thinking of the internet and all that free materials, what you can find, education. It is definitely a good thing, but it is also sometimes a lot, and you can easily get confused. You can have so much of wrong information, flood of information, and the key is really to stay focused and be focused on less. And I think a lot of people fail to that, because nowadays we're living in a different kind of world. So I decided to find for myself what kind of strategy do I need where I can spend less time, I can still profit from the market volatility and momentum, and I can still make money without spending too much in front of the computer, too many hours, and struggling so much. So I knew I need to keep it simple, because that's my personality. I don't personally like the strategies extremely complicated, and you don't know where to start, and you have like 20 different indicators on the chart, Ichimoku clouds, whatever you call it. It's just not the way how I work and how the strategy is gonna work for me. So I decided to sit down, go through as many charts as I can, develop something from scratch, and go back to basics, back test, go back through different cycles and see what worked. And this is how I came up with the strategy which I'm currently using. And the strategy which I'm currently using is basically focusing on a couple of stocks, especially I like growth stocks, or ETFs, 2 to 3 time ETFs. Those have enough, volatility and as well momentum to trade them. And when I focus on less and on the, bigger stocks with enough volatility, I know I can follow up throughout my, day. I don't have to sit down 24 hours and day trade. And that was how I came up with the strategy which I'm currently using. So who is this strategy for? The strategy is, again, for people who do not want to sit all day in front of the computer. I know everyone is different. Everyone has different strengths and weaknesses. But for me, it's been always like, I don't want to sit all day at the computer and watch every single tick, every single candle. First of all, that makes me nervous, like I cannot just sit and watch it. I want to focus on the big picture. I want to be able to look at the chart once or twice per day, put my orders in, know where is my potential profit taking area, where is my stop loss, knowing my areas which I'm looking at, maybe put some alerts, sound alerts, so I don't miss something. But I don't want to sit and watch. So that's not for people who are more active traders. They're going to get probably bored with that. This is for people as well with small accounts. So people who are trying to grow their account but don't have enough capital. That's why some of those 2 to 3 time ETFs work actually pretty good for small accounts. They're still relatively cheap, and they're making decent moves, so you can actually profit on those big moves as well. And this strategy is for beginner and also for advanced traders. So anyone who is advanced will know, what I'm looking at. I think it can be used from advanced traders, but also if you're just starting right now, trying to figure out what works for you, I think this is a good idea as well. Okay, so let's see. Next one. So basically what I'm doing, guys, is a top-down approach, or how I call it is a 3-steps approach. And the first step is one of the most important steps, in my opinion. Unfortunately, especially when you start out with trading and also with investing, it's all about cycles, and people start with trading and realize, and I had the same problem, that's why I'm sharing it with you, because I know I went through the same thing. You know, you start something, you're doing very well, you're having some decent profits, and then you know, all of a sudden stuff what has worked stops working. It's just not working anymore, and you start asking yourself, what happened? This was working, you know, like 3 months ago. Now it's not working anymore. Now, am I doing something wrong? Is the person who is teaching me that not doing a good job? Maybe they have no clue. So you just start questioning yourself, and you're going through those ups and downs, which I mentioned at the beginning. So you don't realize it's not the strategy. You're just applying the wrong strategy in the wrong market cycle or ecosystem, how I like to call it. You just apply setups which have been working in, for example, in a very uptrending market cycle, you're applying it in a distribution cycle or downtrending cycle. That's why it's not working. And being able to identify those things and switch from one cycle to the next one, and as well adapt your setups, in my opinion, this is key or very, very important when it comes to trading. So identifying the right ecosystem, what is currently happening, is showing you, are we in a risk on or risk off market? So this is how I personally like to call it. Like, this whole year has been a lot of volatility, and a lot of volatility means also a lot of opportunities, but it also means a lot of ups and downs. So especially for beginner traders, it can be very, very exhausting to go through this upside downs kind of you know, cycles and movements and huge range, where you just have huge stop losses. One day you're going straight up, the next day you're going straight down. So this can become exhausting, and being able to identify this is currently an extremely volatile environment. I need to adapt my stop losses, I need to adapt my position size, maybe stay away of the market for a little bit until things slow down. That is key here, and step number one. So that prevents you from your gains from becoming losses due to applying the wrong strategy in the wrong ecosystem. So I'm going to go into that in detail, guys. We're going to go now through those cycles, and I'm going to explain those 3 steps, and then we're going to go through some examples on the chart. I want to explain to you on the chart how this looks like on the chart, how to identify it live with examples on the chart, not only the theory. So maybe next time you see that, you will be able to know that's exactly what it looks like. How can you read the price action? So price action is telling you everything. Okay, so we're always going through 4 different cycles. So the first one is the accumulation cycle, uptrending cycle, distribution cycle, then downtrending cycle, and then we're going back through accumulation cycle. So this is the so-called bell curve, and this happens over and over again on different time frames, different markets. Even it happens in life if you start thinking about it. So it's very important to pay attention. What is the current market environment? What is the ecosystem? What's happening? What sectors are moving? Accumulation cycle normally moves sideways, means normally we are holding some important support zones. There are more buyers stepping in, trying to hold certain area. And after that, we are breaking out into an uptrending cycle. This uptrending cycle is actually, in my opinion, one of the easiest to trade. This has been 2020, by the way, the case. 2021 has been as well the case. So this uptrending cycle has been extremely easy also for beginner traders. You know, you can just come into the market, you throw money at any stock, and everything, almost everything goes up. While in a distribution cycle, you will have much more volatility. You will see sellers stepping in, charts start to become choppy. you are gonna get stopped out many times. Setups which have worked in an uptrending cycle, those setups will not work anymore in a distribution cycle. So you will see a lot of ups and downs, a lot of wild price action, and eventually this could turn into a distribution or in a downtrend cycle. So after the distribution into a downtrend cycle, and from there we're going to go back to accumulation at some point. Now this is has to do as well a lot with the current monetary policy, and I want to mention that because I think this is important. I personally like to combine technical and fundamental analysis. I like to, analyze stocks. What are they doing? What is the growth of the stocks? Do they have earnings per share growth in the past 1 to 3 years? Do they have good revenue growth? So I really like focusing on growth stocks, but at the same time, one of the most important things is trying to figure out what's happening on the big picture. And as I'm explaining, those cycles, accumulation, uptrending, distribution, those have to do a lot with the monetary policy. So when we're in a very easy monetary policy, what we had in 2020, and Fed is printing a lot of money, flooding the system with money, it is much, much easier to get money. People are investing a lot of this money into the stock market, creating it to go up, creating those uptrending cycles. And all those risky assets like growth stocks, even Bitcoin, considered, in my opinion, as a risky asset, they start to go up. Everything goes up because people, or also companies, can borrow money easily, and they're focusing on growth. Now, when we have another monetary policy like what we have right now, Fed is starting to tighten, increasing the rates, tighten the monetary policy. We have high inflation environment. We have a lot of uncertainties, Russia, Ukraine, all that. All this should be for you a sign that there is a lot of unknown going on. And with this tight monetary policy, a lot of those companies which have high debt, they will not be able to pay back their their loans. So some of them will go bankrupt. So this means we will see a lot of downtrending. We will see a lot of slowing down, and stocks like value stocks, like something like Coca-Cola, McDonald's, they will be more stable, while those growth stocks will start to go down. Now, the good part is we can profit in both cases. So when the market goes down, you can profit as well on the way down. And when the market goes up, of course, that's, like I said, in my opinion, one of the easiest. You can profit on the way up. The most difficult part in cycle, in my opinion, is the distribution cycle, because this is actually the cycle where you start switching from this easy going environment, buying the dip environment, into a more choppy market environment. You don't know yet, is this just a correction, or is it going to turn out to go into a downtrend? And once we switch that, then it's easier to adapt. But this phase here, the distribution cycle, can get actually more exhausting for especially for beginners traders, if you don't know that we're going through that. So those cycles have to summarize, those cycles have to do something with the monetary policy, with the overall environment, and they don't last forever. Of course, we don't know how long each cycle is going to last. We don't know this, but we do know based on the chart what the price action is telling us, and we do know based on the chart where potentially the next move of the market is going to be. And with the right risk management, you can profit, like I mentioned, in both directions. So that's important. Again, if you open up the chart, you need to know what is the current cycle. And I really like thinking of probabilities from there. What is most likely going to happen? So if the market dropped, let's say 40% in the last 2 months, just as an example, most likely it's gonna not drop more than another let's say 20%. Most likely it is going to reverse. So trying to apply a little bit logical thinking and probabilities to find the best risk to reward setups is definitely going to help you. Okay, so step number 2 from this 3 steps approach is to focus on less. I know this might sound very easy to a lot of you guys, but a lot of the times, especially as you start trading, you just start, tracking like 20, 30 different companies. Some people I know trading 30, 50 stocks. I'm not saying it's impossible. It is definitely possible, but if you want a low stress environment where you're just trying to to get a couple of trades, and the topic of this webinar today is trying to do that as a side hustle. If you want to do it part-time and generate some side income on while you're working, then you need to focus on less. You have to focus on the best what you have, maybe 2 to 4 stocks max, and then the ETFs, which are 2 to 3 times ETFs in your trading portfolio. This is enough for you, enough options to have to trade with. It's going to be enough, enough momentum, especially in those 2 to 3 times ETFs to deal with, and you don't have to go up and down every single morning through a list with 60 stocks or something like that. You don't have to track all of those stocks, so it becomes really easier to manage, especially if you're having a busy lifestyle and you don't want to deal with too much stress. It is sometimes, or not sometimes, actually a lot of the times, less is more, and that's in this case definitely as well part of my strategy. So ETFs, the advantage of those ETFs, 2 to 3 times ETFs, is that you don't have to track. This is a basket of stocks, as you guys know, and you don't have to track the individual companies. So you don't have to know when is this company having earnings, what did the management do. You don't have to go into detail. You're just trading a basket of stocks. It can be the tech sector, it can be any other sector, whatever you feel comfortable. It can be energy sector, and you're focusing on a basket of stocks, and you don't need to track in detail every single company. So that's definitely the advantage of that. And of course, all of those have some disadvantages. Of course, they're getting reimbalanced and all this stuff. But for shorter term trading, like a couple of days or weeks holding those stocks or ETFs, that's fine. You really don't need more. Too much information, too many things will definitely prevent you guys from getting to your goal. So always remember, regardless of what you're doing, try to master one thing instead of being average at 10 different things. So that's something I've been doing a lot throughout my trading career, and maybe this is why you've been struggling. If you guys are struggling now, or not where you were at, try to figure out what is the problem. Maybe the problem was what I just mentioned. You've been applying the wrong strategy in the wrong environment, or maybe it is you have 60 stocks on your list and you don't know which to look first, and then you just become more like trying to chase all of them instead of waiting and focusing on only one. So that could be one of the reasons. Now, step number 3, this is actually very important step as well, and very easy in my opinion, is trying to identify liquidity pockets on the chart. So this means you need to identify and find out what are the supply and demand zones on the chart with the current price action. You need to be able to find out where are the buyers and sellers positioned. And you also have to be able to find out on the chart what is the risk versus reward on this trade which you are going to take potentially. Do you have a good risk versus reward, or do you have an average risk versus reward? The liquidity pockets are nothing else than support and resistance zones, old school name, where you just identify where are the levels where buyers were showing interest, and this is where the support was in the past, and this is what we're looking for. Is this zone being tested multiple times? How likely it is that we might see a bounce of the zone, and so forth. So that's important. And also, like I mentioned, when you're looking at those levels, it's important to figure out what is the chance, what are the probabilities that we're going to go higher from there. So for example, if we, let's say, like I said at the beginning, if we drop, for example, 30% on the market in the last couple of months, chances are we're not going to drop another 50% in the next 1 month. Chances are, if you're right at the support zone, we are going to stop. We're going to consolidate for a little bit, and then we're going to continue further higher from there. So that's something to keep in mind, guys, before you trade. Try to think of probabilities, what could happen. Also based on the chart, we're going to go through some price action examples. I'm going to show you exactly what that means just in a couple of minutes, and we're going to discuss also those cycles on some of those ETFs which I trade. Okay, so yeah, if you've been struggling, yellowing and diamond handling, it's not a sustainable strategy. So again, you always need a plan. When you enter a trade, you need a plan. You need to know what is the plan, what is the potential outcome, what is the potential goal here for this trade. Are you trying to make 2 times on your risk, 3 times on your risk? Do you have enough room to the upside, to the downside? So you want to have a clear plan before you enter the trade, not after that. Not like, unfortunately, a lot of times, especially now, what we have seen through 2020 COVID situation, a lot of new traders come into the market, and unfortunately it became like people start trading, throwing money at the market, and everything works. Bitcoin worked, like I said at the beginning. You just catch the right momentum, uptrending market. This doesn't mean it's gonna stay like this forever. And unfortunately, it became even worse with this yellowing and diamond handling and all this stuff. So yeah, you can win if you're lucky, with that. But at some point, you have to figure out what is your strategy, because at some point you will give it back. Even if you got lucky, this is not going to be consistent. That I can guarantee you. So that's with that. Now I would like to jump into some examples, discuss what I'm personally looking at, and you guys can definitely take notes and see if you're looking at the same things, if you are familiar with some of the concepts. Okay, I'm gonna go here. So I personally use as a trading platform ThinkSwim, and this has been actually pretty good so far. You can use any platform; it doesn't really matter what you're using. This is free. You don't need to have on this account to trade with the account in order to use it. So that's actually pretty good. So what I'm using here is, as you can see, I have multiple lists. And one of the lists which I have is ETFs. And I have here a couple of ETFs. So I want to point out some of the ETFs which I'm trading, which I just mentioned, those 2 to 3 times ETFs. Some of the ETFs, one of my favorites, by the way, TQQ and TNA, TZA as well, SPXL and SPXS and SQQ. So I'm going to explain real quick, just as a, I'm not going to go too much into detail, but just for you guys to know what are those ETFs for those of you who are completely new here. So I'm going to start with SPXL. So that is basically, if you're trading the SPY, let's take a look at the SPY real quick. If you're trading the SPY, that is the chart. It's actually the exact same chart. It is just a different product for that. It has more leverage, and you can trade it the same way, but you just need to, you don't need so much money. So in this case, it is $74.90 per share SPXL. Now, if you want to trade the same thing, but let's say you want to short it, like I said, we will have some cases where it is a profitable strategy to short it, but you don't have a short account, or you don't know how to short it, never shorted the stock. A possible way to do so is to use the SPXS, which is the reverse, the inverse ETF for SPXL. So every time the SPY goes the SPY goes down, this one goes up. And every time the SPY goes up, this one goes down. So you can just buy it. If you're buying this one, this means you're shorting the market. So those are the two, and it is the same way with TQQ, which is the ETF for the Ultra Pro ETF for the QQQ, which is the Nasdaq, the tech sector, and SQQ, which is the inverse ETF. And the other, which I'm personally trading, or not trading so much, but watching, I don't like to trade the Russell too much, is TNA, and for the small caps, 3-time ETF, and TZA, the inverse one. So only if you focus on those guys, it is enough for swing trading, for a couple of days trading. You really do not need much more than that. Of course, if you have small account and you want to trade something else, there are plenty of opportunities as well for individual stocks. But what I'm trying to do is really keep it as minimal as possible, because I don't want to overcomplicate things. I'm here just to have stress-free environment in trading, and I don't want to get overwhelmed with too many stocks, especially if I don't have time. So of course, I have here a list of growth stocks, which I'm following every day for, like I mentioned at the beginning, through different accounts, which I'm managing and doing. But if you're trying to focus just on a few and you don't want to deal with too much stress, I think this is a very, very good strategy. So let's start with the TQQ, because this is one of my favorite instruments. Probably some of you already know me. I really like to trade the Nasdaq, and been doing good in the past with it, and still doing good, very good with it. So it's just kind of my go-to instrument to trade. But it doesn't matter if you take the SPXL or something else. It's the same thing. You have also other different instruments sometimes. If you would like to go with DRV, real estate, 3 times a bear ETF, you can use that one as well. If you want to trade a different sector, again, there are plenty of opportunities. You just need to pick whatever you are comfortable with and just stay with that. Okay, so let's go to the TQQ. So first of all, again, you need to find out what is the current cycle. And I'm going to delete those lines, guys, so they don't confuse you. And I'm going to explain those lines in a little bit. What are those lines and how to use them? So again, first of all, what is the current cycle? What was the current cycle? Like I mentioned, we're going to start back here, so you know what was back here, the cycle after COVID. Like I said, and like we discussed, it's been a very, very strong and bullish uptrending cycle. And we can see back here, uptrending cycle means very nicely moving, higher highs, higher lows. Everything is moving smoothly. You don't have a lot of things going on. You don't have a lot of stress. Everything is looking like that. If you buy the dip, normally it continues higher. You can even buy the breakout and hold, it will work. Buying the breakout in this year, it's been horrific. So you really can't do that. This is not going to work. So you have to know this is never lasting forever. It might seem sometimes, and sometimes even myself, I'm falling into that and thinking, oh, this is going to last now here forever. I need to buy it. And you start feeling like FOMOing sometimes because it's not stopping, but it never lasts forever. You will always get a pullback. So in this kind of a market cycle and situation, again, you have to know normally this is a very low interest rates monetary policy, more money printing monetary policy, and risk on market. So you can put money to work and don't have to worry too much. This is easy to trade. Everything goes like that. And what I'm trying to find out is where are the previous support zones, where are potential support zones where I can position myself and start buying into those zones. So I'm going to explain those support and resistance zones to you guys, because those are, like I said, in the third step, the liquidity pockets or supply and demand zones. Those are important. And then we're going to go also to the setups in detail. So support and resistance zones, basically, when you have a chart like that, and back here, you see the high on the chart. For those of you who are completely new, I want to just explain that real quick. This here, the breakout zone, is a previous resistance zone. So obviously, at some point, there were not enough buyers and the price stopped continuing to go further higher and you pull back. So sellers step in. The previous low on the chart is your support zone. Once we break out through this resistance, now this is a breakout zone, and now this previous resistance becomes support. And after the breakout, a lot of times you will see a pullback into this previous support zone. So what I'm looking here is I'm waiting for the price to pull back. So this is the correction of this uptrend. You have a move, correction, and so forth. So I'm waiting for the price to stop correcting, and I am looking to catch this next swing move to the upside in a very bullish environment like that. So sometimes, especially in a bullish environment like this, you will not have a lot of drops, so you will have just a little bit of a pullback. And I'm looking personally a lot at the candlesticks and price action. I don't like using too many indicators. I just have here the moving averages 9, 20, 50, and 200, and the RSI. So those are just indicators which I'm using as a guide. You have to understand every single indicator is delayed. There is no indicator which is going to show you the future or going to show you what's going to happen next. There's no such thing like that. You just need to go with the current, price action. What is the price action telling you? If you're waiting for some Ichimoku clause to cross or moving averages or whatever, and you need 20 indicators, then this is just, you're missing the point. This is not how, in my personal opinion, how it has to work. It needs to be clear, very simple. You need to know what you're looking at. You need to understand the buying and selling psychology a little bit behind the chart, and then go from there. So what I'm looking at is, like I said, waiting for the pullback and waiting for a sign that this pullback or correction is over and we're going to continue for another move to the upside. So example here, let me zoom in a little bit in this very bullish environment. Example, there are plenty of examples here. You're just, after a move, you're waiting. Sometimes in a bullish environment, this could be 2 to 3 days, red days. And I'm trading the daily chart, so I'm basically waiting for this to set up here. See a first green candle. It can be bullish engulfing candle, reversal candle, just some bullish candlestick formation, which shows me that this is over and we're continuing further higher. So you see that was back here. Sometimes it can be a consolidation like this, where the chart goes sideways and breaks out here. Those were all here. It pulled back a little bit more, but then those are all examples of a potential breakouts and pullbacks and consolidation and continuation further higher. There are many ways to manage this. I'm not going to go into detail because we don't have the time for that. So you can, if you have the right trading management tools, guys, you will maximize a lot of those trades. So it's important to use trading management techniques which are going to maximize your profits and minimize your losses. You need to have a plan, like I said, before you enter the trade. You need to know where is your potential stop loss. What if the market reverses? Are you moving your stop loss? I'm personally using manual trailing stop, which means, just to real quick summarize it, I'm not going to go into detail, but if I enter example here and it moves in my direction, I start to move my stop with certain rules in the trend direction. So in this way, if it pulls back, I'm going to get out for a profit, or if it pulls back immediately, sometimes I might get out of the trade for break even, or zero profits, but also zero loss. So this is one of the techniques. So that's in a very bullish environment. Like I said, that's the easiest way to join the trend, make money, invest, and not even look at it. But then at some point, remember what we discussed with the distribution cycle. At some point, you just see that momentum is slowing down. There's no more buyers left here. And at this point, we broke out and pulled back down again. And you see the previous low, this is your support zone. And look what happens. You start to see here that you have all of a sudden more red candles. Let me zoom in a little bit so we can see this better. Okay. So you start to see here that you have more red candles and there is no more momentum like it was, for example, in the past. So you see we're breaking out, but remember the picture which I showed you with the distribution cycle looks like this. So that's exactly what we have here. It broke down, holding, trying to hold, trying to break out, but once it reaches the breakout resistance zone, you start seeing reversals, sideways price action, another big candle, big red candle. So this is a sign that volatility is increasing. Always when you see big red candlesticks in after a nice uptrending environment, this is a first sign that something might start to change here. Of course, it's never a guarantee, but first sign you might see a switch here from one cycle to the next one. And again, this is what happened here. One of my favorite setups in this cycle is the failed bounce setup, which means, you know, a lot of times people will continue to buy the dip because you don't know if this whole uptrend is over. You buy the dip, and when you buy on a pullback like this, which is a valid setup for a buy, you want to see follow through this momentum. You want to see a continuation further higher. You want to see big green candlestick. That's the trading plan and what you're looking for. If you see, on the other hand, one day it goes up and the next day it starts to go red and starts to make this candle, this is your sign that things are changing. The sellers are taking over here. You see the candle is also very, very big. More sellers are stepping in. And at some point, we're breaking the support zone and continuing further lower. And you see that many times, you know, here as well, failed bounce, trying to hold support, but then drops, reverses, and continues further lower. So those are the setups for distribution cycle, which I'm looking for. Failed bounces, failed continuation, failed breakouts a lot of times. So if you guys are trading breakouts and buying at the highs, again, if you're doing this in a distribution cycle, this is a bad idea because the market is going to just stop you out. You're going to experience stuff like that, and you're going to get stopped out many times, and it will just go against you. So that is here a key factor. So again, you see the distribution cycle right here, broke below, and then at some point we started to go lower lows, lower highs in the downtrending cycle. Now, this downtrending cycle doesn't happen a lot, guys. Downtrending cycles, yeah, you have some, but they're normally in a very bullish environment, or in a, you know, let's say very more certain environments. They're not lasting long. So if you look back on previous breakdowns and downtrending phases, they don't last more than a couple of months. So after a couple of months, normally you see that we're going back to you know, to an uptrending cycle. They don't last long. This year has been one of the longest in the past, you know, couple of years. Longest correction is of months. So we're now having 20th of July. So it's been definitely a very long correction since the beginning of the year. And now we're starting to see finally a little bit more slowdown and potential reversal at this point. So again, that's how you identify those cycles in combination with the overall geopolitical situation, overall monetary policy, and so forth. It helps you a little bit to understand the price action and to understand who is in control on the chart. So once you figure this out, next thing you want to know is to pick the direction and go with the trend. But then going with the trend doesn't always mean you have to, make money. Sometimes you might go with the trend and still get stopped out if you don't apply some logical thinking, like where is this going to go? For example, a very good example of that, we already have a huge drop here. I mean, the market corrected, the Nasdaq corrected, I think it's like 30% or more, 35. A lot of stocks dropped, a lot of the stocks from the tech sector dropped 60, 70%. So if you're trading now, if you're trying to short here at the bottom, then you have to ask yourself, well, it's been correcting now for 7 months. We're in a downtrend. And where is this gonna go? Yes, it can continue further lower, but if you want to join the downtrend, first of all, historically, the market always goes up. Yes, we have right now different situation, but you need to understand the better chances for success and the better chances for winning in general in this whole trading world is, especially when it comes to stocks or trading the market, are on the long side. Yes, you will have opportunities on the short side, but in general, historically, the market goes up. So again, even though we're here at the lows, if you're trying to short at the lows, most likely you're going to get stopped out. And one of the keys here, guys, is to figure out if you're wrong, you need to get out of the trade and patiently wait for another signal to continue in the current trend direction. So, or sometimes against the trend, sometimes counter trend trades are also a possibility if you're at the right spot. So example for a good counter trend, by the way, even though we're still in a downtrend, and I traded a couple of times here, was back here. That was failed breakout to the downside. You see, it broke slightly down, but then it started to show more strength here, green candle, exhaustion, and then you can long that and just take the move to the upside. Same thing here, reversal candle. So showing that it's holding this zone for a couple of days. What does that reversal candle mean? So reversal candle or doji candle, hammer, whatever you want to call it, I know people use that, but you need to understand what is the meaning of this. Like, what does that mean? This means the price went at some point to the downside, and obviously there were no more sellers left because it closed with a reversal and green, like in this case. So basically buyers stepped in, and what we're discussing about support and resistance, buyers are supporting this price and pushing the price to go further higher. That's why it is called support zone. So if you see that a certain zone is holding for a very long period of time, and you see some bullish candlesticks formations like doji candle or something like that, bullish engulfing, that is the reason for that. Same thing here. We came back down, and I, by the way, traded long, short. I took those whole waves, and that's the beauty, guys, of trading one instrument. Like you just need to go with it. Once you know the nuances of this instrument, the details, how it behaves, it becomes just a little bit easier to go with. So, for example, back here, you see it's holding the support zone, making reversal candles, doing still some green candlesticks around this zone. So chances are this is going to go further higher, and it's not going to continue lower. The price action is showing you that before this move here happened, before that. That's why I'm saying sometimes the price action is, like better to go with instead of trying to wait for some delayed indicators to happen, because at the end, of course, no one knows where the price is going to go. You can always only have some clues on the chart, but at the end, the most important thing is to apply your technical analysis and risk management. Risk management is really everything, guys. If you don't apply the right risk management, you can have the best holy grail strategy, but it will take one bad trade to wipe out your whole profits from maybe a year or from maybe a months of hard work. So applying the right risk management is also crucial here, and not only just jumping into setup. So this is my approach, trying to figure out what is the current situation, what is the overall ecosystem, what's happening on the big picture. Then if I have a risk on market, then I'm going to start looking into some more stocks, more volatile stocks. I will try to find stocks which can make 100, 200% moves with a lot of momentum and volatility. Once I figure this out and have those stocks, then I will trade them. And when the situation changes, then I have to change with it. And guys, this is not, it's not the easiest thing to do. This switch from one environment to the next one is actually a challenge. And it's been a challenge for me too at the beginning of the year to see that, you've been used to something. And when you start to switch to a different cycle, and as a trader, you have to adapt and switch to that. You have to, first of all, accept that you're going to go through some drawdowns. And that's why I'm saying at the beginning, I'm saying risk management is everything. Because if you're going through drawdowns and you just allow yourself to be a little bit in a drawdown, but this drawdown does not destroy you, does not destroy your account, you're still up for the year, you're still making money, that's fine. But if you are not realizing the market environment is changing here, I have to change, I have to get out of losing positions, start to look for something else. If you do not realize that and hold, some of those stocks drop 60%, 70%, Netflix was even 80%. So if you're holding to some of those and hoping they're going to come back, they might come back, but what is the key here? Is it what is your plan? Is this investing? If that's, long-term investing over the next 5 to 10 years, that's fine. That's a whole different story. But if your goal is just to make what we're discussing here, short-term side income, and you're trying to trade and generate some more income, then holding to those for months is basically gonna, first of all, destroy your capital. And the second thing is you're going to have also missed opportunities in other trades because you're holding to those losers. So you're gonna have money to trade something else. So very, very important. Again, risk management is huge part of the trading success, and should be a huge part of the trading success of everyone, because at the end it's all about math. If you think about it, it's not how many times you're right or wrong. You can have 50% win rate and still make good money. If you can be half of the time right and still make good money if your winning trades, your winners are bigger than your losers. So once you understand that and you start realizing that this is how it works and this is all about math, and I don't want to be emotional or get involved, the market is going to go up, I'm right here. Yeah, you might be right, but it's not about being right or wrong. It is about trying to make money out of that and quickly move on. If you're wrong, you're wrong. Accept it. That's how I see that. And as soon as I realized that, I really started to see change in my results, start to grow my account. Something didn't work, cut off, move on, wait for the next opportunity. Don't get emotional. Don't get mad. Just losses are part of the trading game, and people are getting emotional over that. But those are our expenses as traders. So that's what it is. If you think about it, as a trader, that's the expense you have. Other businesses who are opening stores and whatever, they have different expenses. Their expenses, they have to pay rent and all that stuff. We as traders, our losses are our expenses. And as soon as you treat it like a business and in this way, you will definitely see improvement instead of, trying to be emotional. So on that note, again, being here trying to generate profits from trading and side income from trading, as you see, it's a little bit more as of just looking at the chart and buying or selling. It's a little bit, in my opinion, trying to figure out the big picture. You don't need much time once you figure out what you're looking at, but you need a good plan. You need to understand big picture. What instruments am I trading? which direction am I going to trade them? And then from there, once you know the direction, figure out if you're looking at those 5 to 8, let's say, charts, you're waiting for certain support and resistance zones to happen, and you just go with them, and you don't need to invest much time into that. But understanding the whole big picture, the whole trading plan, execution, and management of the trades, that's going to take you, of course, a little bit time to learn. But once you master that, you really don't need much time on the daily basis if you're swing trading. So example, you can put, here your alarm on the support, the next resistance is here. You're going to watch how the price reacts here. Are you going to see here some reversal candle? Maybe it's going to show you some selling signal, and you can short sell and stuff like that. So that's that. So guys, I hope you enjoyed this this session and webinar, and I'm approaching here the end of it, and I wanted to share with you. So there are a couple of possible ways to work with me. I have I'm going to share that here with you. I have an inner circle, I have a trading community, and most importantly, I have a free trading kit here. So for those of you who are joining the first time, I definitely encourage you to check this out, SilviaBellrock.com, free-courses, and you're going to see here my free trading kit, which I have a free trading course, killer crypto setups from Benzinga Corporation, technical stock analysis, short 13 must-watch short videos, and so forth. So those are all free, and you can check them out, register here, and take the most what you can. And if you join this list, you're going to get also special offer for my inner circle. I have a couple of members, and we are discussing regularly our trading ideas. I'm helping those members to become profitable traders, to get better with trading on a daily basis with, private text and messaging and everything what it takes, what you need to not to trade alone on yourself, but to be hand in hand with me, with other traders, and discuss all those strategies on a daily basis. If you're failing with discipline, I am definitely going to help you to stay disciplined, and I will track your success as well. So that is why I started this community, to share my personal experience like I did today with you, but also to help you to get where you want to be, guys, and generate some some side income and get better trading results. So if you want to join here, the one is, like I said, free, and you're going to get some emails after that if you join here my list. Okay, so I think I'm at the end of the time, David.